Good morning, everybody. Excuse me. So more inflation data. Pretty well, I wouldn't call it benign. I think that's an overstatement. But according to the numbers, it's not getting worse. Still bad, of course. You know, go to the grocery store or whatever you're going to buy. It's not like what we see in the market. Market's reacting to the belief that the worst is over, and maybe it is, but still bad. So anyway, you can see prices are up here, lower right chart, overnight data for the SPY, and you can see the cursor where it's at. So it's not doing what I wanted anyway. You know, yesterday was the little end of day sell-off, but you know, that really wasn't a big deal. This could gap and go. It could gap and crap. I mean, you know, how do you ever know other than just after you know to see it? So, you know, the targeted area was up here, 410, 200-day moving average. That's where the pivot is and resistance. Now that it's gapping up, you know, wide range bar, gap up, and we'll see if it pulls back into here where, you know, this area would be where we would want to see some type of a stabilization, and then maybe it goes higher, or, you know, we're going to get a red day. You know, this is the unknown, what they call the right hard edge or the hard right edge of the chart, right? Is it going to gap and crap and we get a red day, and then things will look a little nasty and they'll come down into this area where we still have to have a bias that's where we would want to buy it. But so far it's starting to look like just a runaway train if it's a gap and go. So we'll just have to see how that unfolds. We'll see if anything else is already at price resistance, but you know, so far it's got room to move up toward that targeted area. We'll see what happens when it gets there. Unfilled gap down here, probably worth setting an alert. Take you 2 seconds to do that. And all right, where are we at? We're gapping up slightly above 400, which is pretty large area for open interest in calls, which I'd have to look to see what expires today or the end of the week or so on. But it could fuel prices pushing up above here today. So clearing resistance, that's a good thing. And you can see a little bar futures, 24-hour chart. And was that yesterday? Yeah, that was the end of the day yesterday. Little breakout failure and a move down, but held above that support area. Lots for monthly. So McGraw's telling me 4,000 is a lot of calls and puts that have open interest at that level, which kind of makes it a tug of war. Does it? It's called pinning there. The end of the month, that's next week, right? The expiration is Friday, right? Friday, McGraw, the 18th. Yeah, that's Friday. So what does that mean? Well, you've got this calls outweigh puts. Okay, now you're talking over my head. The put deltas. Okay, put deltas, they is. Okay, whatever. So what that means is sometimes as you go into an expiration where you have a strike that has a large number of puts and calls, it kind of acts like glue sometimes. They call it a pinning, where all those options can expire worthless. And so while it's gapping up here, it may get dragged down and we may see prices stay in this area into the end of the week. There's more economic reports, I think, coming out in the latter part of the week. We've got some earnings reports that are coming out in the latter part of the week. I think NVIDIA, I think Walmart was today, and some other retailers. There are more calls than puts. I'm pulling your leg, McGraw. You know, I like to simplify things and make fun out of not Greek people, but all that Greek terminology. And then when we get into Vanna and all that other stuff, woohoo, what a party. So maybe it kind of doesn't go too much higher. I mean, it's obviously if it hits the 200-day moving average, that should be a bump in the road. But anyway, the trend is up. There's no correction bar. And by correction bar, I define that as going below a prior bar's low and then flipping back up again. And yesterday didn't go below a prior bar's low. So no correction bar. I mean, it's a red bar, closed below the open, but doesn't meet that particular definition of a correction bar. Thank you. It's a white Vanna. Hey, be careful. Now we're going to have to get into white privilege and who knows what other stuff. So let's not go on that third rail, McGraw. All right. So this is now, compared to these 2 days, a range expansion bar. We don't know where it's going to end, but just, as we're looking at the futures here, this is obviously a monster range expansion bar. But when you get a range expansion bar, the next thought in our process is, great, a little bit more power. It's not at the target yet. The bottom of the bar becomes a very important, in the short term, line in the sand. So this should not turn into a topping tail by the end of the day. I don't know if it will. Nobody does. Should not break below this bar's low, because even if it closes like this and then tomorrow breaks below this bar's low, we'd have a breakout failure, at least 2 bars, a breakout, and then break down below. So bar by bar analysis guides us as to what's in the moment. Everything's bullish. It's not even pulling back. There's no pivots. It's not breaking a prior bar's low. Buyers are in control in a big way. Maybe they're a little over enthusiastic, but it is what it is. And as it's doing this, range expansion bars become very important as to, in the short term, not to be violated. So that brings us into whatever that's going to go the end of the day and tomorrow. If it closes like this or it's at the 200, obviously risk is continuing to grow as you get toward the target area. That momentum is at least going to slow down. It doesn't mean crashes. It doesn't mean giant pullbacks. It just means that risk is growing as you get close to an area and there's been no corrections along the way. So SPX, which honestly I haven't looked at, but I know where I don't want it to go. And had my choice, it'd be above 4150, because that would be a no-brainer, but I doubt there's anything there, and there isn't. 41, even 41 doesn't have much. 200-day moving average is about 48.78. 40.90, 40.95. You want to be above that 200-day. And it's not that far away. Now, if there's any premium below 39.60, 50. 39.50. Wow. Okay. Yeah. This is where the no, good and bad here. It looks like a no-brainer for 39.40. But look, the reason I say it's a no-brainer, right? It's not like it's really a no-brainer. The probability of this could be a breakout failure, granted, but it's got to get through these pivots. This is a significant level here. So there are going to be buyers on dips. And so to come down here, you have your terror moment, right? If it starts diving down there. And so you can obviously wait into the open and see what's going to happen here. But so far, this premium down there at 39.40, 80 by 90, which is decent. And that puts you down here below everything. So even if it goes diving down here, it's going to, well, let's put it this way. If it was to dive down there in one fluid stream over the course of, say, an hour or so, and you got a minus 1,000 tick reading, it's going to bounce off of here And then you got decisions to make. Get out on the bounce, add down here, and so on. So the downside is much more attractive. The upside, make your choice. You want to up above the 200. If that's there. 40.95. Yeah. It's pretty close, but wait a minute, I'm looking there. SPX. Let's just 40. Where's the 200? Okay, it's above the 200. So by the time it gets to 4,100, it's done. It's cooked. So I think that's fine. And 39.45. No, it's up here, right? It's traveling up. It's got to come down below here. So same story. You're down below here. So I think either one. Considering looking at SPX, the 200 is up here, and that same idea. Traveling all the way up there would be, let's say, exhausted. That's my belief by the time it got up there. 39.40. 39. I guess it's backing off here a little bit. 39.35 is 80 by 90, which is fine too. $30-year hit a fan. It's coming down to support, not at the 50 yet in the pivot. It's wiggling around. That's the 10-year. That's the 5-year. They've come down a lot. So what's the dollar doing? It's kind of hanging there. It's already, it's down here on the September low, and that's yesterday we talked about. Well, there's August down here, ultimately. So you keep an eye on that intraday. Now, this is the major support, is where we talked about yesterday, that coming down there, interest rates getting to their respective level, that buyers would begin to step up here more aggressively and shorting and covering and so on. Euro. Put the 200. Not really much to the left of the 200, but possibly it gets up there. But let's looking at the 200, and so with futures, look, moving averages are subjective too, and just from my memory, those that trade currencies tend to look more at exponential moving averages, but it moved it down a little bit. So the simple is just a little more smooth. They're still clustered in the same area. All right. Tech, breaking out of there. Looks good. Look to the left. At its pivot, stalled right there. Right. Magic hidden levels right on your chart. Can you imagine? But again, wide range bar, right? Range expansion bar coming into resistance, likely to stall. Already stalling. Right? We talked about this was going to be the one that's going to start lagging because it led the way up, and it is. Getting close. I wouldn't chase this market. Most of the time they come down. It's rare that they just keep running and running, and sometimes when they come down, it's kind of like, oh my God, like it's over. And they're going to they're going to recover until they reach that target, but maybe it gets there. It's not that far. Well, but SPY was playing around 400 yesterday. It was right there, and now it's pulling back toward it. And that's why those SPX premiums down below are increasing. And we'll, of course, at the open, we'll keep an eye on this and see, does this keep drifting lower? Backing off from the 200, right? The magic moving average. What is IT? And I forget the symbol, the cash between different $sign T transports T. I can't remember what it is in T signal. No, I just typed Tran. It's got a $sign and E signal. I think it's T something, of course. T. Yeah, but that's the ETF. I wanted the cash one because the cash one has only got 20 stocks. This ETF has got 50 stocks in it. TJT, I think. TJ. No, it's not TJT. Whatever. I'll figure it out later. It's not TRAN. Yeah, I've typed something there and I erased it. Anyway, it's not TRAN. There we go. Thank you. So see the difference? That cleared its 200. It's got a topping tail and it's getting close to the pivot. And this one just at there. So they're not the same thing. I just wanted to point that out. There's 50 stocks in this. There's only 20 in this one. This is the one that's quoted. And the other one's just it's an ETF. Silver did amazing, with the dollar. It makes sense. Gold's still holding up there, and crude oil is just a mess. So that's it. All yours, Dan. I think a little choppy, more choppy action today. We'll see if this gap holds or what it's going to do.
Good morning. Yeah, I was happy with yesterday's close because I wanted the pullback scenario. And now that makes it more difficult to get on board. We'll just do what we do every day. All right, so we are fully, all our positions are bullish except this EVRG. We shorted this. We covered a third right at the market close, and I moved stop break even, so that's fine. Qs, we have a half of a 270 puts, and I said let's try to bid 20 cents to get out. We have target naked puts. Let's go ahead and take our money on that with the gap up. We did 3 earnings stocks. Target's up on the heels of Walmart. Walmart, we did what's called a short straddle. We shorted the 130 puts way down here and the 150s, so $20 wide. And 9 out of 10 times you're going to have one of the two sides causing you the pain if on a big gap. Ideally, we want these things to open flat, and then we get amazing volatility contraction. All right, so 146, it's a bullish gap. So I'll be watching the call side. We're still $4 out of the money. And ideally, it just keeps pulling in a little bit. And when we get out at a profit, DLO, we shorted 17.5 puts into earnings. So I sent out an alert. I'm just going to bid a nickel to get out. And finally, we did Home Depot 267.50s. So it's under all this. So even with a cap and down a couple bucks, we're gonna have an open game. because of volatility contraction is bigger than the gap. Yeah, it was all things are holding on. Yeah, I hate chasing. That's why you all remember on the gap up day, I was so bullish. I like getting in on the igniting bar, because then so many times you're chasing without a good stop. We did start loading up, but and we sold puts on the Qs. I wish we sold puts on, I wish we bought calls on the Qs. Roku here on my list from yesterday. Beautiful 1, 2, 3. That looks fantastic. So that's good to go. Today's Tuesday, so over Friday's high. Valley, we're in long. That's gapping up. We got a nice open game. We've only sold a third. Futu, that's an amazing gap reversal down here, but now it's a Climo gapping up $3. That could be a gap and crap situation for a day trade. There's our target, BBWI. I think Dan Loeb said he was buying some of that. Remember Baidu, Baba yesterday? I was stalking, bottoming pattern, void, target 50 MA. Now they're gapping up too much, unfortunately. Twist getting whacked. That's a bio. TSM. I was watching this all week long for the past week, and I was noticing accumulation in this thing. It's an ADR though, and I never hit the mouse to get in, but now the news is released that Buffett taking a 10% stake, so now you're gapping up to $81. You know me, the contrarian, on a 30-minute low. I'm thinking sell that on money call spreads. Square, we still have a half lot of naked puts. That's gapping up. So I said move stop, 30-minute low. These are some earnings here. C's. Oh, kind of a sloppy bull flag. I got plenty to watch. Schiller's here, 27.50. Now, just hypothetically, if this were gapping up to low 24s, that would be a tier 1 gap trade to buy 5-10 minute high. But now the gap's too big. Shit. I just deleted a bunch of earning stocks there because a stupid trade station lumped them together. Oh well. I don't know how to get them back. ECC's earnings. I don't like the way it trades, but a 1, 2, 3 would be interesting. Hua gapping 253, bottoming pattern. EXAI looks like it's gapping down, but that's a 1, 2, 3 over Friday's high. I like it. ENR, we'll come back to you. IHS, 1, 2, 3. Donut, I mentioned yesterday, is either an M top or consolidation in an uptrend. So we'll come back to that. I see one print up here at 75. We'll come back to you. Aqua, little pattern. Triple V, strong, but no pattern. It's running uptrend. Berry, we'll come back to you, see what sets up. TME gapping up $5, no pattern. ARMK, nothing. SE 55. That looks good. Here you go, folks. That's a pro gap, and it's actually not that. I mean, I prefer just gapping over yesterday's high, but at least it's not excessive, like $65. So that looks really good. Yeah, definitely Tesla. Let's see how it sets up. Yeah, we actually had that as a bull call debit spread. Definitely, that looks good. Let's see if it can hold this 15-minute pre-market. All right, Home Depot, Walmart, we know about. These are a couple, these were earnings from yesterday after the bell. I'll go through them quick here. That's a piece of garbage. Yeah, from down. I don't like the way that trades. Summer. There you go. It's gapping down, but bottoming pattern. I'm going to set an alarm at 7:20. If it can get over that 15-minute pivot. Well, those, I'm seeing the last print 650. That would be 10% higher if it went to 720, But I got nothing to lose. If it goes there, it's bullish. Gapping down, sloppy. Schillis, that's the one we already looked at. That's a mess. Rum. It looks like a SPAC. The way it came out of here, down, up. I don't know. That's junk. Asta, look at this monster gap to 62. Now, this was one I wanted to sell puts on. And it was either insufficient premium or crazy spreads. Those are the two reasons if I don't do it on a pattern I like. DNA bottoming pattern, DLO, 2450. Not bad. We'll come back to you. We'll come back to you. Sounds like a song, right? NU gapping the resistance, but a bullish gap. All right, so my favorite gapper is Sierra Echo here. Sierra Echo, 5-minute high or controlled pullback. Alex, your GWRE alarm. All right, I just got filled at a nickel. I got filled at a nickel on the DLO. G, this looks good. Look, gapping over a day and a half of this. All right, what did I get for? Home Depot's not open yet. The quotes are still old. Ah, Walmart, I got out at $1. I had a bid for $1 to get out of my Condor. Now I'm at a Home Depot to nickel. All right, so these are all working. All right. All right, Walmart. All right, here's what we're gonna do. All right, I'm getting filled on all my short puts, so those are working well. Z Zulu up alarm, we're long that. Oh yeah, we got a nice profit here. I hope my dollar was way too much. I wonder if he gave me price improvement. All right, it's 60 cents. All right, so here, this one started to give me a little heartache this morning, but it turned into a winner. So Greg, we're add 5 to 5 to our cumulative list. That's a bullish gap right there. Hey, southeast, I said my favorite gapper. Look at that, folks. I hate chasing, but that is a beautiful gap. Target 65.70. I don't like chasing at 9:32 in the morning, but that's a beautiful pattern right there. SAIC low alarm. That was a 1, 2, 3 from yesterday. All right. So let's maybe 5-10 minute. This would be a no-brainer call spread, but it's spreading. But I also had it on my list.